Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright. Here's our Coinbase chart. I'm on the 4 hour, and I like to give away stuff and, share my knowledge and my charts and everything. So, what we're going to do this video is we're going to start with Scratch Coinbase chart. And we kind of draw this up and alleviate some of the confusion in the space and get a better idea as to what is actually taking place right now. Because I see everyone is very, very confused again, and nothing has changed. So let's start with our Coinbase chart, and then you can check the description below, and the link will be in the comments if you want to go ahead and access this chart as well. So I got on the 4 hour. Matter of fact, I'm gonna zoom out real quick to the daily, and we'll just put in a couple key little trend lines, and then we can kind of go from there. I'm gonna give you guys the big picture, full chart. There's a lot of ways you could do this. I like it here because it has like the most confluence, like touch points. Essentially like little fake breakout failures. But we got like overall, solid touch points, trends, all that good stuff. Take a little something from down here. So that's like basically our parabolic trend line. You see like obviously the slope is like pretty intense on it. And then you'll notice at some point in time, the price action starts to move away and then comes back and doesn't make it back down to the slope, and that's the slope intensifying. Okay, so now what essentially has happened is, the slope intensity has increased. So it was blue, and now it's going to green to represent the slope is increased. Okay, and then you'll see typically, there will be like another slope increase at some point in time. You know what I mean? Like whether you want to call it like these 3 points right here, or whether you want to call it like this right here. If you go to like shorter time frames, obviously, it becomes much more evident, as opposed to looking at like this. But essentially, you have like your blue, then your green. I might just turn this white. You have your blue, then you have your green, then you have your white. Then finally you fail, come back down, lose this as it's actually off just a little bit, but you basically come back down, support, lose it, resistance, come back down here, you know what I mean, eventually like capitulate through this area. And a lot of this stuff is subjective, how you want to draw it. It's not always going to be perfect, because you'll have areas like this where you kind of come underneath here, but if you see like it lines up a little better with the top and the capitulation and gives you like overall better. So like I said, a lot of this is subjective and it's not always going to be perfect, but you can get the overall point. It's essentially like we're in this long bullish uptrend, and then all of a sudden, we started going like legitimately parabolic, and then when we retraced, we couldn't make it back above this point. A couple times we tried to come back up to it. Okay, so that gives you a pretty good idea what's going on now. So now what I want to do is take from the market top over here, and then essentially you want to go from the market top to the market bottom. So this is the market bottom, the low after the high. Okay, so this is not as low, so that's obviously not the bottom. So we're going to basically come over here and essentially, now you see how I have this drawn now. The idea is to get, once again, like as consistent of touch points as possible. So you'll see now, I'm going to go ahead and turn that one red. So you see now, obviously, like we're pinching into like this triangle, and then we got the breakout and the intensity, and then we come back down, and now we're pinching into the purple and red triangle, and then we try to get the breakout up here and failed, and then we got the dump when the world economy took the dump, and we basically made it outside of it, and we're trying to get back in, and then finally broke back in, and now we're just trying to hold it as support. So everybody's wondering, what was this big move right here? What happened? Is this it? Are we bullish? Are we going to the moon now? Nothing even has changed. We literally got a reaction rally attempted move back up to try to get bullish again, and it failed. We couldn't even take out the high. We couldn't even get back to the high right here. So nothing has changed. If until we get above 7,400 on a daily close, until we close above 7,400, 73.75, whatever this is, nothing has changed. When that happens, when we close above 7,400, if that happens, I will expect a move to the top of this channel, back up to like the 98.51 range. But right now, this looks extremely weak to me. This looks extremely weak to me. Okay? Now I want to draw in a little bit of horizontal resistance and support. And please keep in mind, I'm talking about big picture right now, okay? But we could go up or we could go down from here. I'm not talking about that in this video. This is, we're looking at literally years upon years of price action right now. So don't think too deep into like, the short-term aspect of what's going on here. So, all right, so now we're on the daily. Now what we're looking to do is put in like some horizontal like support and resistance areas, okay? So it's very obvious where they're at. You can basically just glance at this and see where like key points are. This is obviously a key point right here. We touched it, touched it, touched it. There's a ton of spots. You can come here a lot of different places and put this wherever you want. When you're not sure exactly where to put it at, go up a time frame and then go off candle closes. So on the daily, it looked like it could go a bunch of places. Let's go to the weekly now. So on the weekly, I think it's much more clear where it needs to be, and I think we have it in the right place. You know what I mean? We have like the most amount of candle closes essentially like in there. So now what we need to look at is, this is a main resistance support point, whatever, and then there's a second one, and where's that at? It's literally right where we're at right now, okay? So now this is essentially like a key resistance support zone. That's a key resistance support zone. You can put it essentially like anywhere in here where you're getting like the most touches, and we're either right on top of it or right below it. But I mean, we're at a key area in the market. So it's important that we keep that in mind, that essentially like this is a pivot, and a pivot is, typically the best place to take a position off of. So if you're sure of direction or unsure of direction, a pivot is typically the best place, because the idea of the pivot is that it's going to decide from this point if it wants to go up or down, and the closer you are to the pivot, the less you have to be wrong before you can conclusively say, okay, I'm wrong, price action's going the opposite direction. So if you try to take a trade from like right here, it could go all the way up here and you could be right, but you're way underwater before it pivots back down and comes. And as opposed to if you take a pivot trade right here and it goes up, you're wrong right away, it's going up. And if it goes down, you're wrong right away, it's going down. You don't have like this big gap area before you find out if you're right or not. You know what I mean? So if you say, oh, it's going up from here, you have this whole triangle area essentially as like, your target trade area. As where if you say like, oh, it's going down from here, like, you don't have nearly as much leeway. You have a bunch of like resistance right below you or support right below you, that would potentially be a factor. And that's all the idea of like confluence is the more of these like points or lines or whatever that line up, like the more important a specific area is, and like the more of a reaction you would expect to see like from the market, because you essentially have like each one of these lines, is going to add other people in other parts of the world in this market that are like seeing the same thing as me. So there's people that only use horizontals, so we're seeing the same thing right here. And then there's people that are using like, these diagonal like slope lines and triangles and everything, and we're all seeing the same thing. So when you take all these things together, it helps you to have like more of a big picture view, the more like useful levels of confluence that you have. So all right, so now here we are, we're inside this triangle. We've been moving inside this triangle since April of 2017, basically. We've been forming like this giant triangle, since we topped out essentially here, put in our market cycle low so far, came back down for the retest, okay, closed outside of the triangle, but we're able to push back in. So now we're at a crucial point. It's like, all right, are we going to be able to move back up from here and consolidate around until the end of 2020, the rest of the year, basically consolidating in this point, in this range? Or are we going to get a break in one direction or the other? Because if we get a confirmed break in that direction one way or the other, it's going to be a massive move. Not that this already wasn't a, if we went back down to 3,700, I mean, that's 50% move. So it's obviously going to be a massive move. But, if we break out of this triangle to the upside, you know, I would essentially expect us to at least get, I mean, if we're going to break out of the triangle, it means we took out this high right here. So that means our next target is 11.7. So if we're going to the upside, I mean, that's over a 50% move right there. And then after that, next target is 20,000. So, I mean, we're basically at that key point right now. It's just important to like stay focused and not get chopped up and change your view like every day what's happening. So, in all reality, looking at this chart, how we have it right now, what's the most likely thing to happen is? Most likely thing to happen is for us to go up and re-challenge the high at like 9,800 or whatever. That's the most likely thing to happen. Because what happens with support and resistance? When you're in a support or resistance zone, you're most likely to stay inside that zone until you don't. It only breaks, confirm one time, typically. So until that break happens, you're going to assume that that resistance or support zone is going to hold, you know, as it has been holding. So I would assume this is going to hold as it has been holding. Okay. So even though my bias is bearish in this situation, looking at the charts and everything, you know, it looks like based off of this that we're going to get that move back up to the top side of the range and test it. Now, that's not necessarily going to happen because we could get like the move right back up to like 7,800 and we could get denied because we just can't get above like this support resistance, like, you know, zone that's essentially like fighting us or holding us down. And, you know, it's very important to keep in mind stuff like that. Stuff like that as well. You know what I mean? We essentially have like this zone right above our head. So if we do get the pop up to like 7,800, 8,000, you know, we're essentially just going to be like fighting this right away again. So, you know, it's not like free sailing. And that's essentially what like the blue sky breakout is all about. And that's like the importance of like taking out the all-time high is. As soon as you go above like, you know, 20,000 or whatever, there's no more resistance above your head. There's no sellers that are underwater. Like everybody that's ever bought this asset and still owns it like is up on their position. So they have no reason to like try to rush out of a position. Usually what happens is when you put in a top and you come back down and then you try to push back up, there's a bunch of people that's underwater from here to here. So as the price pushes back up and they get closer and closer to break even, they want to try to get out of that position before the next retrace happens. So essentially it gets back up to here, the retrace, and then people dump their position again. Same thing happens again. It gets back up, but it keeps putting in a lower high because more people are just trying to get out of that position every time. You know what I mean? And then finally you come in over here and you take out that previous high right here, and then all of a sudden you get some buying action, and then it's oh, hang on, that's like how you can tell the market is switching now. Now you're consistently getting more buys than sells, and you're taking out like all these previous levels of resistance. But then finally you max back out and you can't take out like the top, and then you're going to come down and do the same thing again. And that's exactly what we did here. So now what would we do? The exact same thing again. We try to take out the low on that big dump right there, and it didn't happen. So now we're going to come up and try to take out the high, and then eventually one of these two things is going to happen. One of them is going to break. But until then, we're just going to oscillate inside this range. So it's very important that you see this and that you understand that, you know, this is essentially till the rest of the year. We have 9 months that this can play out. You know, and it could essentially just squeeze. It doesn't have to break even before then. It can literally just squeeze sideways and then later on, you know, just slowly start creeping up or down or whatever it wants to do. But more importantly than not, it's important to focus on like the big picture of everything that's going on here. So there we basically have like the laydown of the chart and everything on the longer time frames. But now I want to go into like the actual like relevant price action, what's going on now, because this is where everybody's like really confused, and you know, I want to really help out here with some of this confusion and help people to see like the big picture again. So so we're going to take that sell-off that we had that was like 3,800 or whatever, and we're just basically going to do the exact same thing again. Okay, so we're drawing like a slope line. This is our slope line. You know, we're bouncing off of it. The intensity of the slope is like strong right here. Okay, so the intensity of the slope is strong. So I'm gonna put this as purple, okay? And then the next thing that happens is we finally like don't find support on this. Bounced it, you know, bounced before it, bounced it, failed. Okay, so now the next thing that happens after we break through that slope line is we're essentially going to look for our next swing right here, and then our next like discernible swing right here after we broke through, and then that's going to form our next slope line. So now this one is less intense. So the same way that our slope was becoming more intense to the upside, it's becoming less intense to the upside. So this is like the opposite parabolic trend that we had when we were going up, because this is like a trend like rolling back over. Okay, so purple is intense. We lose the purple intensity. We come back. We find support on the red, and then we lose the red intensity. So now what we're going to do is look at our next swing lines slopes and essentially see like how can we draw like a trend line from these. Okay, so now we have basically our next one, which is going to be orange here. So now we have our next, it's the purple was the most intense when we were getting our rally back to the upside. As we started to lose strength, we got like the red like put in another high, but again we start losing strength. We come back down and find support on the orange right here, and again this is where everybody was getting very bearish that we had broken out of this pattern right here, but we literally came into contact with this extremely long important trend line, and then also the parabolic slope line of the retracement. So that's why it's so important to be focused on these things right here. So now what I would expect to happen now, and we talked about all this, I talked about all this specifically in the video, how we said that there was very likely to come back down here to the 0.5 and then get the push back up to take out the shorts. We could potentially even get that push up to like 7,800, 8,000 and really take out the shorts. But what we're looking for now is this line to continue holding. So we're going to come back down at some point in time and get like a retest right here. It's likely going to be a retest of the red and the orange trend line, and then potentially a retest of the blue depending when it happens here. So I think it's very likely we're going to get like that 66 to 6,800 like retest here in this area and make sure it holds, and then we could potentially get the move back up. And now look, we break through this, come back down, test it, and then test it, but we take out the high after 2 tests, and then we take out the high again after another test. Okay, so when we break down here, we come back down, we test it. So I think what's likely to happen is I think we're likely going to come back down here, test it maybe one more time somewhere around here, and when it holds its support, then we can kind of oscillate a little bit, and then we get that break up to take that out and get the new high, and then potentially from there we could top this out. Now alternatively, this was our top right here, and if we start coming down here and putting in a swing, then we can start like drawing the parabolic descent, which is essentially, and again we're kind of jumping the gun on this one, but I want to put this out here ahead of time so you can see it happen like as it plays out, because a lot of times people like think, oh, it's hindsight, this, that, and the other. Like I draw all these lines in ahead of time, and then the price action moves into my lines. And don't think for 1 second that I just draw so many lines that it just randomly looks like it's interacting with them. It's very clear when I explain to you how each one of these each one of these lines is drawn and why. I think it becomes very clear like how I create the chart matrix and the importance of it, and why all these support resistance like zones and all this is so important. So and I did want to add in one more over here too, just because this has been like a very important line that we've been paying attention to the whole time. This was basically like what was forming our ascending triangle, but it's also now clearly defined itself as a channel. So where everybody was like drawing all these weird channels back here before the channel had actually developed, and none of it made sense. And I was talking to you about if you were going to draw a channel, you would draw it from the top. You would draw it from the top point right here, not from the bottom point right here. You would draw it from the top point right here when we topped out, and then you would have it go across this way. And now look, that's parallel now. You have 2 parallel lines. So that's very clearly a channel. That's very clearly a channel. You have multiple touches on the top and bottom. Multiple touches. That's a channel. When everybody was drawing it the other way around, and there was basically, they had the bottom line of the channel like this, and then they had like, whatever, like 1 touch on the top or something like that. Or they had it drawn like this way, and there was like 1 touch. You have to look for, consistency, and you have to look for validity. Okay? So this is both consistent and it's both valid. it's consistently hitting the same points over and over again. It's being like very reliable, and then it's also valid because it has multiple touch points that confirm like market reactions, in those specific areas. And if you actually draw back, I'm not going to get into all of it, but if you actually draw this line back over here, that actually has like another level of confluence to some other very important resistance support. But this video is going to go forever if I explain to you how I draw like every line I've ever drawn. So yeah, let's just get back into it. So essentially we're back over here. We're essentially like getting to the point where we could be potentially maxing out this parabolic trend and coming back down here, and then this is going to act as resistance, and then when we come back down here now, we would get squeezed right here and then eventually get the break back to the upside or to the downside, and then we would look for either this to hold or we would look for like the retest of the next one. And that's why essentially this is like the pivot point right here, and from that pivot we're looking to either pivot up to 7,900 or pivot down to 6,100. So either way, that's like, I mean, it's like over what, 12% or something like that roughly, in either direction. So that's why it's so important or so good to take a swing trade off of a pivot point. So but anyway, yeah, so next we got all that going. Again, everybody's getting very bullish on this, and we're just going to zoom out here real quick, and now we're going to add in a couple of Fibonacci's. Again, I'm not going to go too crazy and add in like every single Fibonacci I've ever drawn. I'm just going to do like a couple of basic ones, just so we can have like a idea exactly what's going on, and what levels are most important right now. So basically what I'm doing right now is I am drawing it from the top here at 20,000 to the bottom here at 3,000 roughly. So that's our orange fib right there, and you'll see when we came back down and top to bottom got a retracement, we came up to the 786. So we got a 786 retracement, found support on the 618 after that, and then finally dumped it, retraced, resistance, dumped it, retrace, resistance. And when we dumped it, we retraced the first time we came to the 0.5 and then got the bounce. Second time we came to the 382, okay, and then got the bounce. So then we dumped back through here and almost came down to the new low. So from the new low, we would expect at least a 2 fib level bounce, okay, or not the new low, but from that low. So the 2 level bounce would be from 236 to 382, from 382 to 0.5. So what we're looking for to happen here to fulfill this algorithm is we're looking for this 0.5 fib level to get hit. So once this algorithm is fulfilled, then it can flip and we can start moving back to the downside. Okay, but that's not happening because we keep like getting weakness at the top here. So what I need to happen is I need this to go ahead and find strength, get the continuation up here, and then finally wear down the books of all the sellers and take out all the shorts and everything. And then once we get to this point right here, the fib can be fulfilled at the 0.5, and then once that 0.5 is fulfilled, we can potentially come back down, try to find support at a higher level, which I would expect to be like the 236 or the 382, or potentially take out the low and put in like a new overall swing low for this market. But at this point in time, that's what we're looking to happen is because until that algorithm like gets fulfilled, it's going to keep just trying to push the price in that direction, and that's very clearly what's happening right here. This price is clearly being marched up, like fighting, trying to like fulfill this. And once again, that fib level right there in white is going to line up, or I'm sorry, that support level, resistance level in white at the top of the channel there, is going to line up with our fibs here, and then the more levels of confluence that we have, the more likely obviously it is to play out. So, and as you'll see here, we just drew in this yellow line earlier just to represent like a key resistance support, and you'll see that it's actually like the 0.5 fib level is what's so important about it. So once again, it's confluence because it's not just a parallel or a horizontal support or horizontal resistance. It's actually like a key fib level. Okay, so we have our orange fibs. We're going to do our next Fibo. So now we're going to go from the swing low down here, and then we're going to go to our swing high off this move, which was like the 14,000 range. And then you'll see now what we're looking for is how low did we come on that retracement. So initially we came to the 0.5 on like the main retracement here. Everybody got very bullish. All we did was just retrace 2 fib levels upward. So we made it back to the 382, back to the 236, just above the 618 on orange, and then we got that massive dump sell-off when the economy died. And that took us all the way down to the 886, and it took us down there within pennies. I mean, it was 38.60 and the 886 was at 37.79. So it got front run by like $80. The 886 got front run by like $80, and the 886 is like the last resort pretty much. So, but you'll see from once we got that 886 level, we actually have bounced this back up 1 fib level, 2 fib levels, 3 fib levels already, and we're actually looking for the 4th fib level bounce just because that was such a massive capitulation move. And again, where does that 4th level fib bounce come in at? The 382 comes in exactly at the 0.5 and that orange support resistance line. So this is becoming a very, very, very important area right here, and by far the most important area in crypto as far as I'm concerned at the moment. So what I would expect to happen is consolidation. The more I'm looking at this, the more likely I feel like this fib has to get, you know, it might get front run by a couple dollars, but you know, essentially until this algorithm gets fulfilled and this target gets met, you know, there's just going to be too much buying pressure coming in before like the bots can flip to the sell side again. So so that's my honest opinion, you know, as far as like bias based on just looking at all this and breaking it down and just you know, talking and thinking out loud. So alright, so we got so many fibs going on right now. It's getting a little bit crazy here, but obviously, like, you know, it's very important that we stay focused and just finish this out because we're just about done. Our next key swing is this one right here. So I want to do another fib from that point, and obviously we're going to go all the way down to the low right here, and I'm going to go ahead and turn that fib yellow. And now here we go. We're going to look at this fib, and in order to truly get like a good idea now, we can go back to the shorter time frames. So I'm going to go back to the 4 hour. So keep in mind we're paying attention to this yellow Fibonacci. So right now we bottom out right here. Okay, we get the move back up to the 382, double fib bounce. So we get 1 bounce, 2 bounce, come back down, try to sell back off. You know, find some support at the 236, and then 2 level bounce up. So we get the move back up from the from the 236 to the 0.5, and then almost make it up to the 618. Come back down to the 382. So that's like 2 back down, and then we move back up here, almost 2. Couldn't quite get it. Come back down, put in a higher low. You see what's going on now, though, and the level of confluence and how important this is. We finally find support, and then we can make it up here. We finally fulfill the 618 target of that dump, which is the golden zone. But normally people would be expecting the 618 to reverse. Everyone gets very bearish, but the real fib target has not been fulfilled yet. So again, we're still looking for that fib target at 7800 to get fulfilled. So at this point in time, we're finding resistance at this 618. So if we can't break above the 618, we're going to come back down here to the red support line at 6550 and try to get support again. And then we're going to rev back up, and then we can bust back above, and then we can finally get that move up here. And it, you know, honestly, I'm becoming very biased to the upside. Everybody else is so sure it's going down here, and you know, layering in all these shorts, and you know, my shorts all got taken out already. My shorts all got taken out on this bounce. Matter of fact, when this candle got posted, I was like super bearish. Leading up to that, I definitely thought we were about to break this zone, and then when this closed, I was like, oh man, that's it. That's a bullish reversal. That's a reversal candle. We came down. We just barely front run the target right here. We hit that key support level right there. This looked like, to me, just a quick little front run. And then the way we closed that, definitively, like, very bullish. Huge wick at the bottom. Huge wick at the bottom like that. That's like a strong rejection to the downside. So even though we put in a new low, it was such a strong rejection. You know, anybody that was basically, like, trading this is going to move their stop losses down as they go. So if you short it in here, you're going to like move your stop loss basically to like break even once you get to like this area right here or whatever. So as soon as we essentially get this push up here, depending how you're doing it, like this is, I'll show you how I had my stop losses and why I got taken out. Essentially, I'm looking for like this right here. Once we break above like that resistance that's like holding us down right here, and once we break above like our previous closes right here, you should be out of like any shorts for sure. You know what I mean? Because you're taking out like the previous swing. But, you know, this is not financial advice. I'm not your financial advisor. You do whatever you want. But, you know, that's the way I trade is, you know, I'm going to be taken out right there. So you'll see this look like initially like a stop hunt because the wick comes up takes out the close, which would be like a lot of people's stop loss at the close or whatever, and then like sells off, consolidates, and then all of a sudden gets like the next push up here, but can't necessarily get higher. But then all of a sudden you see the wick come in again. Look how methodical this price action looks like. It was trying to sell off, couldn't do it, moves up. Trying to sell off the exact same amount. Look at where the wick is at. Look at where the wick is at. Look at where the body's at. Look at where the body's at. Look at where the wick on the top's at. Look at where the wick on the top's at. That is very methodical bot marching action. And the third one looks exactly the same too. And then look, it gets that big push up to the upside, which matches this wick right here. This is very, very methodical bot action. And when you see that happening, you should be very cautious of it. And now here's another specific example. Look how similar this looks right here. Look at this candle right here, and look at that candle right there with the wick at the bottom. Look at this candle right here. Look at this candle right here, and the wick at the bottom. This is the same exact move. This is the same exact move. It's 9% and $648. I mean, just eyeballing, maybe not exact, but, and that's 12% and $754. But this is the same move. I mean, this is like a W pattern, basically. Like, all this is like, you know, a range bound, like consolidation or price action. Essentially just like murdering people's stop losses. Like, whoever FOMOs into a trade in that direction just gets like taken out inside of this range, basically, while it just trades sideways. But you'll see it happens all the time. You know, we have this move right here, move up, consolidate, sells off. Same exact move. Same move. Same move. You know what I mean? So it's important you pay attention to like these violent moves. And that's why you're like, okay, we're at the top of this range right here. We were at the bottom. What's likely to happen? We sell back off, come straight back down to the bottom. But instead of just retracing this 100% of this move, we retrace like, you know, 78% of the move or 62% of the move or, you know, whatever it is. So that's the idea of like Fibonacci essentially is like we're going to give back the majority of that rally, but not all of it. And then eventually like, you know, you're giving back less in one direction, and then finally it breaks in that direction. So, but I think that was like a pretty legitimate breakdown. And then now you got all the fibs on here. You got all these like key resistance, support areas. It's like I think pretty clear overall, like what all these patterns are, what all these lines are. So if you're like actually looking at this chart, I think it probably like makes a little more sense now after watching me like draw it in person. So. This is the chart link I'm going to post in the description so you guys can get this one and you know, kind of follow along. And you know, the best part is when I put in these resistance support lines and then I explain them to you, and then you see price action play out inside of those areas and those zones, it will become very clear to you that these are not just like random lines, and it's not like one of those situations where if you just draw enough lines, like price action is going to interact with them. Like the price action is interacting with these lines. It's up to us to determine like which one is more important and where the target is, and then how we're determining like the probability, not just like the risk reward. Because that's where I think people get twisted in trading, like the space. They think like, okay, if price is at 7,000 right now, and you know, I'm going to take a trade to 7,700. That's a 10% move. So a 2-to-1 risk reward ratio would be like, you know, if it moves up, you know, that percentage versus if it moves down like half that much. So I'll just put my stop loss there. You can't just pick random areas and put in like your stop loss. I mean, you can. Anybody can do whatever you want, but that's not how like this works. Like in order to take like an actual risk reward like trade correctly, you need to look at like the validity of the trade and how you're going to know like when it's invalidated. So if you're saying like I think we're going to top out at 7,900, so I'm going to take a buy here, and you know I'm going to buy Bitcoin, and then you know I'll take profits at 7,900. Like how are you going to know if you're wrong? How are you going to know we're going down? All right, how far does it have to go down? I would think like if it starts selling off and it makes it to 6,800, yeah, it could still bounce. We could still get up there. I think if it makes it down to 6,500, yep, it could still bounce up to 79 from there. But I think if you took out that 6,500 point, 6,400 is when you start thinking, oh, hang on, we're like invalidating like this right here. You know, that's potentially like wrong. We're not going to be going up here. We're going to be going down. So now I want to be out of that trade. So you put your stop loss over here. It takes you out of the trade. But if that was your case, you know, you're essentially like the move down is equal to the move up, so it's like a 1-to-1, so that's not a good trade to take. You're looking for a situation where you're very close to your invalidation zone, so that the risk, what you have to risk to know if you're wrong, is small compared to what you know if you're right. So if you're like taking a trade off of the invalidation zone, it only has to move like 1% or 2, and then you're like, oh, I was wrong about that one. I don't want to be in this trade anymore. But if you're right, there's like massive move to the upside, like potential. You know what I mean? It's like, oh, I only had to risk 2% if I was wrong, but it's 10% if I'm right. So that's a 5-to-1 risk-reward ratio. But you can't just say like, oh, I'm going to create a trade that's 5-to-1 risk-reward. So I'll just say like 10% to the upside and 2% to the downside. But you're not basing that off of like specific levels or invalidation zones. Like you're basically just like flipping a coin or whatever. You need to like figure out where the support is, where the resistance is, where the target is, and why that's your target. And then you need to determine like, how do you know if you're wrong? So there we have it, guys. I think this is like a pretty educational breakdown. Essentially, like while I'm working on these courses and everything, this is like sort of just a little mini course for like resistance, support, fibs, all that stuff. If you're not familiar with the indicators, I highly recommend that you pop those bad boys up. You can find them on TradingView for free. And I'm going to turn them on here real quick and see what we're looking at. Fisher. It looks like what happened here basically is, we sold off right here, came down, we're coming back up. Usually what will happen is, you'll get the sell off, come back up, find resistance at like the 0 level, and then we'll sell back off again and get rejected, and then we'll get like a powerful red sell off moves to the downside. And Stoke Slope nailed it like always. Basically bottomed, topped. I mean, pretty beautiful. You can't be mad about that. So, essentially, we would expect to get typically a bounce when the slope hits the RSI or the RSI hits the slope, depending on if you're going up or down. You would expect to see like a reaction rally off that point, and then usually like continuation in that direction, which in this case would be down. So, yeah, that's pretty solid. Let's pull up this bad boy to see what we got going on. As far as, let me go to the daily real quick on this one. Stick to like a little longer of a time frame. This had me thinking actually. If you look at the daily and we look at the TJD TD MACD, you'll see it just flipped over, blue. Multiple histograms at the bottom underneath the red line. That's our first entry point. 2 greens. The second is a cross, and then the third is the flip to blue. So that's 3 levels of confluence for a daily entry on the TJD TD MACD. So that's bullish. You do get fake outs sometimes though, like this. But typically when you get the fake outs, you get those fake outs when the histogram's above this line. Or I'm sorry, the fake outs are when the histogram's below the slope line. But here the histogram's above the slope line. So it's less likely to be a fake out. Like this would be more likely to be a fake out because the histogram and the slope are not lined up. Once the histogram's above the slope and it's blue like that, that's like a powerful move. So we could potentially get like that powerful push up here. I mean, based on that, you're talking about like a nice move, like a 9,000 move. You know what I mean? And then, man, I mean, again, accumulation taking place on the daily through all this. That was your distribution taking place. This is all accumulation taking place. So we could potentially be getting ready for like another distribution dump. But that's just looking out. And then as far as the jewel thief, knife came sticking out the bottom twice. When it got that second massive one, it was very clear that was the bottom. And then same thing here, came sticking out the top once, and then we sold off, and then we got another one. I don't think it's unrealistic to think we could get another cross back up, a massive knife out the top, and get divergence, and then sell back off. But that, according to this though, we are strengthening to the downside on the purple, but the blue is starting to round off, which typically you'll get like a reaction like this. This is what I'm expecting to happen right now. This is the signature I'm seeing right here, okay? We see this signature here, it comes into the red, sells off, crosses back over, And now look, the blue starts rounding out after the cross. That looks very much like this right here. And then we get like this comes in here. We get a powerful move back up and develop divergence. The knife does not make it as high as the previous one. So the knife does not make it as high as the previous one. So it can come up as high as it wants as long as it doesn't get higher than that knife point right there. And then essentially like the blue comes back up. Blue comes back up. And then we eventually like roll over and get rejection and get the powerful move. So I think that's what's happening right here. I think we're resetting the oscillators for another powerful move to the upside before we can get like the dump continuation. And based on the daily, that's exactly what I'm seeing here as well. Let's look at the weekly. And based on the weekly, essentially this is where you take a buy on the TD MACD on the weekly. You get 2 positive histograms. It's moving up, underneath. So that's like our initial entry point on the weekly. So according to this, if it stays how it is on Monday, we're supposed to take a entrance on that. And then as you can see also, you see the best areas to buy on longer time frames are in the distribution zones. So look, this whole area was distribution zone, red right here. And, we're underneath the slope. It's red. And price action is underneath it, which means there's more selling taking place than buying. That's the best place to be buying. Okay? And then all through here, this is where everybody's buying. That's the best place to be selling at the end of that. And then look, all through here, same thing. Best place to be buying, best place to be selling. And then now through here, best place to be buying. So what's going to happen here? Are we going to cross this back to the upside? Or is it going to, get rejected when it comes back up here and then get another one of these powerful moves back down? I think more likely, my bias says rejected because we're at like a key resistance or whatever, but we could just as easily get that move to the upside. So, and then again with the knife, got a powerful knife sticking out here at the bottom. Called that wick bottom perfectly on the longer time frame. And then, here we are. It looks like we're getting ready to curve back to the upside. So this is what happens when, you consolidate in a range for a while. Moving averages and oscillator indicators are less reliable because they all just start like flattening out. That's why it's important to use some that like zero out and others that don't, so you can have like a good idea of what's actually taking place. So stuff like your RSI and Stokes and everything basically just gonna like zero back out, and then when you get the powerful move, like they'll be lagging behind it and it'll be like very clear. You know what I mean? But they're only really useful in the trending markets, as where like we're essentially just like we're in a trading range right now, and like we're at the top of the range right now, and the bottom of the range all the way down here. It's just a matter of which way we're going to get the break in. So, but that's it for today, guys. I wanted to do a deep dive and really get down into it and talk a little bit about the longer time frames and just kind of show how some of the resistance, support, fibs, all that stuff is important and why we draw them where we do. I always try to kind of keep an eye on what else is going on in the space, and I see like Fibonacci's are like becoming cool now and everybody's starting to use them, but the majority of the people I see using them are using them incorrectly. They're not taking the swings from the correct areas, etc., or they're not focusing on the big picture swings. So, I'm just trying to help a little clarity in the space. So, and then on the 4 hour, what looks like we're about to get the sell off here. We've got one red histogram. 26 minutes when we get the second one, that's our exit symbol. Signal is 2 red histograms above price action, above the zero line. And then as far as short time frame jewel thief, looks like the blue is getting ready to roll back over. We are still above bullish support line in the bullish control zone, but the purple is just going to keep moving up here. So it looks like we're getting ready to roll back over. We could potentially get something like this where we roll over, flip the slope, kind of consolidate. What's important to see is if we just roll back over and then start consolidating right back here on top of this support, it looks to me like we're just resetting the oscillators, and then we're going to get like that next move back to upside. If all of a sudden we like roll over and we get like this rounding action and then start putting in like these dump candles like this and support doesn't hold, it's going to be very clear that we're going to get follow through to the downside. But at this point in time, I mean, the whole market's confused. Nothing has changed as far as we're concerned. Keep in mind, we are in a multi-year bearish downtrend on cryptocurrency, on Bitcoin, but especially on altcoins. And if you're super bullish on an altcoin right now to return to its all-time highs, and it's never made all-time highs before, I would not be bullish on it. So people are like, I might have said that like real poorly, but like Bitcoin has consistently made all-time highs like throughout its life. It consolidates and then it takes out the high and moves up. Many of the altcoins have never made an all-time high since like their initial, like ICO or like exchange listings. So if you bought into like something at like $3, let's say like Ripple or whatever, like it's never even come close to getting back to $3. And there's lots of things like that. Even real life assets are like that over a long enough time frame. Something like silver, technically you could say, like made a $50 high or whatever, and then has been unable to ever take out that high since then. In how many years? So in all actuality, like, if silver would have come out at like $40, all of a sudden gets like entered onto the market, and then it sells off down to like $7 or whatever, and gets back to 20, and it can never get back to like 40 or $50. That's essentially like the equivalence of an altcoin. But because silver is like an actual asset, it's been around like forever, it put in a high, and then it's just consolidated for years upon years upon years, and doesn't take out that high, and then eventually takes out the high again, and is back into like a longer term uptrend, just like what gold is potentially approaching right now. As where something like an altcoin literally might only ever put in lower lows until eventually like people give up in it, and like the dev team goes away, and that's it goes to zero basically. And that's the difference between an investment and a trade. I will never invest in something that's not putting in all-time highs on like a macro swing. So if it's not trending upwards over like a long enough time frame, there's no reason to invest in it, because all it's doing is losing value. Like if you look at something over a 10-year time frame and it's always going down, you want as little exposure to that asset as possible. So if you're going to trade that asset, you're looking to trade the retracements of the dumps. So if something's like $1,000 and then it goes down to 500, and you want to buy it at the 50% retrace, you're going to take it from 500, and then you might ride it back up to 750, but you're looking to ride it from 500 to 750 and then sell again. If something is going up all the time, like Tesla or whatever, you buy it at 300 and it goes up to 1,000, and you want to take profits at 1,000, that's fine. You're looking to get back in as soon as you can. As soon as the retracement is done, you want as much exposure as possible. So once it comes back down to 500 or whatever, you buy back into Tesla, and then you stay in Tesla exposed, because over time it continually makes higher highs, goes to the upside. As where something like XRP, the longer time frame exposure you have to it, like the lower it's going to go, because it just becomes, and XRP is like, I'm just saying that as an example. It's not necessarily like even exactly the case. I mean, you could use silver in this example, because if you look at silver on the right time frame, like all it's doing is just putting in like lower highs and lower lows. You know what I mean? So you just look at the asset and look at what time frame you're looking to legitimately invest or trade that asset, and then you can look at like relevant time frames and determine like the overall trend. But like Bitcoin is in an overall bull trend. Like if you held Bitcoin long enough, at any point in time, eventually it's worth more money. You know what I mean? So even if you bought at $20,000, like statistically, eventually that Bitcoin that you bought at $20,000 will be worth more money. That is not always the case for some assets. Okay? Like if you bought Cardano, it may not ever get back up to its all-time high again. As where something like Bitcoin statistically always makes higher highs, something like Cardano will never make higher highs. Statistically, I'm not saying it won't, but if you've heard Charles Hoskinson, interviews lately, talking about how Cardano is more important and influential than Bitcoin, you probably realize that he's delusional, and it probably never will make higher highs. But regardless, but that's it. I'm gonna wrap up the video here, and that's enough knowledge for today. Appreciate all the likes, support, subscribers, and great community, guys. Thanks for all the shares, and everybody out there, have a good one. Stay safe, protect your capital. Crypto Trend Trader, and I'm out of here.